Hello friends, I'm Narendra Verma once again before you. As you know very well that in accountancy for class 12 CBSE syllabus, we have been dealing with the chapter number 7, that is dissolution of a partnership firm, right? So it's time to attend the full-fledged numerical problems. Okay, so today we are going to do that, including journal entries, preparation of realization account, partners capital accounts, partners loan account if needed, okay, and bank or cash account of the firm, right? So without wasting much time, let's start. So you can see the question on your screen. So I have done the question here. Following is the balance sheet of Amit and Sumit as at 31st March 2020, right? Liability side we see sundry creditors, bills payable, Mrs. Amit's loan, Mrs. Sumit's loan, general reserve, investment fluctuation reserve, capitals Amit and Sumit, right? Asset sides we see cash in hand, cash at bank, stock in trade, investments, debtors, then provision for doubtful debts, plant and machinery, building, goodwill, and profit and loss account. Okay. The firm was dissolved on 31st March 2020 and the following was agreed. Amit promised to pay Mrs. Amit's loan and took stock in trade. See, as we read this point, the firm was dissolved. We need to pass two entries. Okay. I have already prepared the format of journal entries. Here the date will be 2020 March 31st. Okay, two entries will be passed. We need not read the question further. Okay, but we know very well what we need to prepare. Pass journal entries, prepare realization account, partners capital accounts, and bank account. Okay, so as we read that the firm was dissolved, then two entries we need to pass. Okay, without reading further. One for transferring all the assets and another for transferring all the third party liabilities. Okay, so let's pass the entry for transferring all the assets. See, you know very well what entry is going to be passed when the assets are created, these are debited, and when the assets are dissolved, these are credited. Okay, so realization account will be debited to various assets. Okay, so leaving cash in hand, cash at bank, and profit and loss account, all the assets will come here at their gross values. Okay, so have a look here. Realization account debit to stock in trade, to investment, to debtors, to plant and machinery, to building, to goodwill, right? Okay, means leaving cash in hand and cash at bank and this profit and loss account. All the assets have been transferred to realization account. One more thing, one point which needs to be remembered here, that is debtor will be transferred at gross value, not after deducting the provision for doubtful debt, means not this value, at this value. Okay, you see 40,000. Fine. Okay, and numeration being various assets transferred to realization account at book value. Fine. Now let's see the liability side. Okay, what is the entry here? Sundry creditors account debit, bills payable account debit, Mrs. Amit's loan account debit, Mrs. Smith's loan account debit, investment fluctuation reserve account debit, provision for doubtful debts account debit to realization account. Okay, now let's understand. Creditor has been transferred, no problem. Bills payable transferred, no problem. Okay, let's talk about these two. See, this is there to confuse you. Actually, these are their wife's loan. Okay, not their loan. Fine. Mrs. Amit's loan means Amit's wife loan. So that is the third party liability, not the second party liability. If in place of Mrs. it was written only Amit's loan, then it would have been second party liability and here we wouldn't have transferred it. Understood the point? Okay, so this is there just to confuse. This is this third party liability. Okay, if they had used the word Amit's wife or they use the word Mrs. Amit's loan, the same meaning is there. Okay, so that is why these both have been transferred here. General reserve we won't transfer because this will be directly transferred to partners capital account. Okay, investment fluctuation reserve will be transferred. Why? Because what is the rule? That any provision or reserve against any asset is there, that has to be transferred. Investments were transferred at book value 20,000, right? Similarly, this investment fluctuation reserve is there against it, that is why this will also be transferred as a liability. That is why we have transferred this amount 2000. Understood? Now, one more mistake most of the students commit. Okay, they miss this provision for doubtful debt. This has to be transferred to realization account as a liability. Okay, because this is also against the debtors. Fine. So that is why we have put provision for doubtful debts account 4,000. Understood the point? Okay, and after that the total comes out 1,12,000. That goes to realization account, being all third party liabilities transferred to realization account. So this is the way to pass the journal entry. Okay, so as I told you, these two entries will be passed when we read this word that the firm was dissolved on this date. Now we will read the question further and do the treatment accordingly. Understood? Okay, so let's read further. Amit promised to pay Mrs. Amit's loan and took stock in trade at rupees 8,000. Means there will be two entries passed here. What will be the entry? I'll just show you. So here are the entries. Realization account debit 10,000 to Amit's capital account 10,000, being Amit taken the responsibility of his wife's loan. Okay, because I already told you in the previous video that whenever we transfer any asset or liability to the realization account, then if we realize any amount from that particular asset or we pay any particular liability, then realization account will be debited or credited. Okay, so in case of liability it is supposed to be debited, so that is why we have debited realization account. And here the liability has not been paid in cash. Okay, it has been shifted to a partner. That is why partner's capital account is credited. Okay, so Amit has taken the responsibility. That is why his capital account is credited. Fine. Now another entry is there for taking over the stock in trade. Okay, Amit's capital account debit to realization account 8,000, being stock in trade taken over by Amit. Okay, if the stock was being realized in cash, then we would have made the entry cash account debit to realization, but it is not the case. It has been taken over by Amit. That's why his capital account is debited. Understood the point? Now let's read the points further. Point number 2. Sumit took half the investment at 10% discount. Okay, very first let's calculate the value of half investment and then deduct 10% discount. What is the value of investment? 20,000. Half will be 10,000. Okay, and 10% will be 1,000. Means 1,000 will be deducted. Sumit took the investment at 9,000. Got the point? Okay, now what will be the entry? Have a look here. Sumit's capital account debit to realization account 9,000, being half investment taken over by Sumit at 10% discount, right? Now let's move further for the entry number 3. Okay, debtors realized 38,000, fine. Let's see that if any other asset is being realized, so that we can pass the compound entry. Okay, debtor is realized, fine. Plant is realized, building is realized, goodwill is realized, and remaining investment is realized. Okay, so we can pass the compound entry for all these. Okay, what will be the entry? I'll just show you. So the entry will be passed for all the assets being realized. Bank account debit to realization account. Okay, being debtors realized at rupees 38,000, plant at rupees 50,000, building at rupees 80,000, goodwill at rupees 12,000, and half investment at rupees 9,000. The total comes out 1,89,000. That will be put here. Alright, so instead of passing 5 separate entries, we have passed a single entry. Okay, that can be done. Fine. Similarly, now let's pass the entry for the liabilities payment. Okay, this is done and this is also done. Now let's talk about creditors and bills payable who are due on average basis of 1 month after 31st March, but they were paid immediately on 31st March at the rate of 6% discount per annum. We focused here. Here it was not per annum, but here it is. Okay, so let's understand what it is trying to say. It is saying that creditor is there at 60,000. Okay, we were to make the payment after 1 month, but we have to make the payment right now, means on the same date on which we are dissolving the firm. So we are getting 6% discount per annum. Okay, so as is the case of 1 month, it has to be 1 by 12 and 6% per annum, 6 by 100. Got the point? Okay, now let's calculate the amount of discount here. It comes out 300. So after deducting the discount out of 60,000, we get 59,700. So that is the amount paid to the creditors finally. Okay, similarly, let's calculate for bills payable. Bills payable were there for 16,000. Okay, for 1 month, 1 by 12 and 6 by 100. Okay, now after calculation, we get 80 rupees. Okay, so from 16,000, if we deduct 80 rupees, we get 15,920. Okay, these two liabilities were paid, the question says. So now let's read the question further. If any other liability is to be paid, yes, the realization expenses were rupees 2,000. We can either pass the separate entry or compound entry. Now see, we transferred many third liabilities, but out of those, 2 have been paid as per the question. Now, in the absence of any further information, we need to make the payment of the remaining third party liability at the book value. Okay, let's see which third party liability is left now. This has been paid as per the question, this has been paid, this has already been paid because Amit has taken the responsibility of that, but this is remaining. So it will be paid at book value. Okay, so that is 20,000. And now you will ask, sir, this was also transferred as third party liability. This was transferred as third party liability, but what was the reason behind it? Because this is against the corresponding asset. Similarly, this was also transferred, but these are not the third party liabilities. This is our money. Okay, that is why we need not make payment to any third person in that case. So the payment will not be done in this case. But this is the third party liability, she has to be paid. Okay, now let's make the total of this. 95,620. What entry will be passed here? Just have a look. So this will be the entry, realization account debit to bank account 95,620. Being creditors and bills payable paid at the rate of 6% per annum discount and Mrs. Sumit's loan paid at book value. Fine, we calculated this amount. This is for creditor, this is for bills payable, and this is for Mrs. Sumit's loan. This amount. Right? Okay. So this will be done for the payment of third party liability. Now let's move further. This point is also over. There was an old typewriter in the farm which had been written off completely from the books. Fine. It is now estimated to realize rupees 600. Okay. It was taken away by Sumit at this estimated price. So this is the case of unrecorded asset. Okay, so in case of unrecorded asset, we pass the similar entry. Okay, but the amount has not been realized in cash. Fine, it has been taken over by a partner at the estimated price. So what entry will be passed here? Have a look here. Sumit's capital account debit to realization account 600. Being unrecorded typewriter taken over by Sumit. Had it been realized in cash, then we would have passed the entry cash or bank account debit to realization. But here the partner has taken, that is why we have debited partner's capital account. Alright, now let's move further. This point is also over. Realization expenses were rupees 2,000. Fine. So as I have already explained to you in the previous video, that when there is no information about the realization expenses to be borne and paid, by default it will be considered that these are the expenses of firms, means to be borne by firm and have been paid by the firm. Okay, so we'll pass the entry for the same. So this will be the entry in case of realization expenses. Realization account debit to bank account 2,000 being realization expenses paid. Alright, now let's move further. This point is also over. Now what we are going to do, we are going to prepare the realization account so that we can calculate whether there was profit on realization or loss, and after that we will pass the entry here. So I am leaving the space empty. You can also leave the space empty. I'll get back to it after preparation of realization account. Okay. Okay, whether it will be profit or loss, we'll see that. Now let's read the question further. No other entry is left as per the question, but let's have a look at the balance sheet. We see that general reserve is remaining, it is supposed to be distributed. Okay, so you already know what entry is going to be passed for that. General reserve account debit to Amit's capital account to Sumit's capital account. Being general reserve transferred to partners' capital accounts in profit sharing ratio. The amount is 20,000. And what is the profit sharing ratio? It is not given, I think. So in the absence of information, half. Equal treatment, equal profit sharing will be there. So both will get 10,000 each. Alright, this is done. Similarly, we'll pass the opposite entry for this profit and loss account, because this is the debit balance of profit and loss account, means a loss. So opposite entry will be passed. What entry we passed here? Just opposite to that will pass here. Okay, I just write down here. So have a look here. Amit's capital account debit, Sumit's capital account debit to profit and loss account. 3,500, 3,500, and here 7,000. Because when we break it in two parts, we get 3,500 and 3,500. Okay, and what will be the narration? Being debit balance of profit and loss transferred to partner's capital account in profit sharing ratio. Okay, I don't have the space, so I did not write it. Fine. So up to this level, we have completed everything. Okay. Now let's move on. There will be two more entries. Fine. One entry will be there for the final payment. Okay, and one more entry will be there in this question. So often the students commit mistake in that. Okay, so I just show you what entry is going to be done. See, cash in hand is given and cash at bank is given, and we need to prepare bank account. That is why we pass all the entries with the bank name. Okay, then what about this cash in hand? Where it is going? What will be done with this? Then at the time of preparation of bank account, we'll pass one entry. What entry? Bank account debit to cash account 1,000, 1,000. Being cash in hand deposited, transferred to bank account. Right? Means cash in hand will be transferred to bank account so that the treatment can be done. Understood? Okay, one more journal entry will be there for the final payment, and that will be done when we prepare the partner's capital account. Okay, so remember here I am leaving space for two entries, one for profit or loss on realization, okay, and another for final payment to the partners. Maybe possible partners need to bring money from their personal property. Okay, that will come to know after preparation of partner's capital account. Alright then, let's prepare very first realization account, then we'll pass that entry, and then we prepare partner's capital account, and then we pass the entry for final payment, and at last we are going to prepare the bank account. Alright, so let's start. So this is the format of realization account. Okay, you'll have to go back to your journal entries so that you can post the entries into this ledger. Okay, I'll directly pick the entry from here. Okay, so very first entry we pass what? Realization account debit to various assets. Fine, all the assets have been mentioned here at the book value. Similarly, as per the second entry we passed, we'll transfer all the third party liabilities here by their name. Okay. Alright, then all the liabilities have been transferred here. Sundry creditors, bills payable, Mrs. Amit's loan, Mrs. Smith's loan, even investment fluctuation reserve and provision for doubtful debts. Okay, thereafter what we did, we went according to this. Okay, Amit took the responsibility of his wife's loan. Okay, and as per the entry number 3, we are going to transfer it here to Amit's capital account, because what entry we passed there? Realization account debit to Amit's capital. Fine. In bracket we can mention wife's loan or Mrs. Amit's loan, whatever you feel convenient, 10,000. Amit took the stock as well, stock in trade. So here his capital account will be debited. He took that at 8,000. Fine. Thereafter we did the entry for Sumit taking half investment. Okay, so in that case the entry was done. Sumit's capital account debit to realization. So the entry will come here by Sumit's capital account, half investment. So after this, we'll see that how many assets were realized and at what values. So you see the journal entry, as per that we will transfer that. So entry you must have passed there, bank account debit to realization. So here we'll mention by bank account and all the assets will be written here. Fine, 1,89,000. Similarly, we made the payment of certain liabilities, so we'll pass the entry here to bank account, and here we'll mention the detail of. Right, all the liabilities come here, 95,620. And thereafter we saw that Sumit took this typewriter. Okay, so we'll pass the entry here at 600. Okay, and then we saw that realization expenses were paid in cash. Now let's check if there is any entry left. If it is left, will be posted. If there is no entry, we'll make the total and calculate profit and loss on realization. Right. So as there is no other entry required here, I have made the total of this side, which comes out 3,18,600. Okay, and this side total is 2,55,620, and after deducting we get 62,980. That is the profit. Okay, and as the partners share equal profit and loss, then Amit gets 31,490 and Sumit also gets 31,490. Now this journal entry will be passed. How? I just showed you. And thereafter we will prepare the partners capital account. Okay. So this will be the journal entry. Realization account debit 62,980 to Amit's capital account, 31,490 to Sumit's capital account, 31,490. Being profit on realization transferred to partners capital accounts in profit sharing ratio. You can put this entry where I asked you to leave the space. Okay, one more entry we'll be doing, but for that we need to prepare partners capital account first, thereafter we'll pass an entry. That is the entry of the final payment or the payment to be received. Okay, let's see. That will be declared only after the preparation of partners capital account. So let's do that. So this is the format of partners capital account. Let's put the entries here. Very first we'll put the balance here. That is given in the balance sheet, 20,000 each. Right. Now, just see the journal entries or realization account. Wherever you find partners capital account, just bring the entries here. Okay. So if we see that there were two entries related to Amit. Fine. One in the debit side, another in the credit side. Okay. So have a look here. By realization account, Mrs. Amit's loan, as Amit took the responsibility to pay his wife's loan, that is why 10,000 here. And to realization account, stock in trade, as he took over the stock in trade. Okay, Sumit took half the investment, so the entry is going to be here at 9,000, right? And any other partner took anything? Yes, Sumit took the typewriter as well at 600. General reserve, 10,000 each. This profit and loss, 3,500 each. And profit on realization, 31,490 each. Okay. Just check if any other entry is left to be transferred here. Otherwise, let's make the total of it. Okay. So as there was no entry, we just made a total of this side. It came 71,490. I wrote it down here. Then I made the total of this side. It was 11,500, and after deducting, we got 59,990. I mentioned it here. Similarly, I made the total of this side. It was 61,490, and total of this side is 13,100. And after deducting, we got 48,390, and I mentioned it here. To bank account, final payment. If this balance was coming here, then in that case, the partners were supposed to bring money from their capital, and you would have made the entry here by bank account. Okay, but here, what is the situation? There is the profitable situation. The firm is finally paying this amount to the partners. Okay, so the journal entry, as I told you that one entry is also left. So this entry will be passed here. Amit's capital account debit, Sumit's capital account debit, 59,990, 48,390 to bank account, 1,08,380. That amount will be paid by the firm to the partners. final payment made to partners, right? Now we'll prepare the bank account and total of both sides of the bank account should match. Okay, so let's prepare that. So friends, this is the format of bank account. Let's make the entries here. Very first we'll put the balance BD from balance sheet, this 16,000. Okay, now you must be remembering one entry we passed for transferring this cash in hand to bank. What was the entry? Bank account debit to cash. Okay, so that will also be posted here through cash account. How much? 1,000. Now you just check all the journal entries or realization account or partners capital account, wherever you find the bank entry, just transfer it here. Okay, so very first the assets were realized, so in that case bank account was debited to realization. We can mention here assets realized. We got the amount 1,89,000, right? Then we made the payment to third party liability, realization to bank. So in bank we'll mention by realization. In bracket we can mention here payments to liabilities. What was the amount? 95,820, right? 95,620, right? Now thereafter we realized any amount. We paid any amount? Yes, we paid the realization expenses. Okay, so realization to bank means by realization 2,000. Any other payment we made? Yes, we finally made payment to partners. And what was the entry? Amit's capital, Sumit's capital debit to bank. Okay, so it will be mentioned here by Amit's capital account, by Sumit's capital account. So what is the balance? 59,990, 48,390. Right. Now let's make the total of these two sides. If the total comes equal, we are correct. 2,06,000 at both the sides. Right. So we are correct. Alright friends. So you must have understood what is the way to attempt the question. Again, in your examination the question is not going to be so long. I just wanted to make you understand how to pass journal entries and how to post these entries to realization account. Okay, in examination either you get the journal entries to pass or you get the realization, partners capital account and bank account to prepare. Okay, so next question, what we are going to do, we are directly going to prepare realization, partners capital account and bank account. We will not be passing journal entries. Alright, so this was there just to make you understand. So you can see the next question on your screen.